Well, hello everyone, and welcome to the Monday Open. And boy, oh boy, do we have a little bit of fireworks here this morning. Down 1% on the NASDAQ, yields breaking through the all important 30-year 5%. We'll get the watermark on this. And of course, some people starting to get a little bit jittery as we hit the key resistance. I hope you're having a great day. I hope you had a good weekend and you're ready to go through, of course, stocks, commodities, and cryptos. Today will be a little bit of a different show. Unfortunately, I'm a little bit under the weather, but we'll do the best we can so that we cover as much as we can quickly. But the main thing here is, of course, the S&P 500, the yields, and also to look at gold and, as somebody said, silver. But realistically, gold will be, I think, the key for this week. So where do we find ourselves, guys? We are at the little sneaky resistance, the major second resistance here on the S&P. Last week, we spoke about fact, it was a bit of a runaway after the US-China trade deal was done. The markets rallied and rallied and rallied and rallied. The only way really to get it was anchored VWAP or something similar, which did yield some pretty good results. But now it's broken under the first anchored VWAP off the last low. So you can see here, doesn't matter how you cut it, we're underneath that level. You can see here the first bounce, the second try to bounce, goes underneath. And now we've broken the first support, which is at 5,900. We'll just quickly load the options so you get a bit of an idea of the important call levels as well, guys. We've got the 6,000 level. We've got the 5,900 level. And of course, if we're looking here, moving forward through till 21st, we've got 6,000 as well. So all these key levels coming up. So really, we're at that resistance or very close to what even the options market thinks is a huge call wall level. I've got an interesting factor that I always like to ask you guys. Are you bullish or bearish this week? Are you feeling the bulls or are you bearish? Let us know. Chuck it in the comments. Let's have a look here at what you guys think. Are you bullish or bearish? 1 for bullish, 2 for bearish this week. Hader says here, anyone else 100% cash at the moment needs some extra fear to go shopping? Oh, wow. That's a pretty big call to be 100% cash. Dr. Horton's bullish. Jesse's bullish. This is a bit of an unfair question. A few bears here, quite a few bears coming in. The reason it's an unfair question is that really this week, sure, you could maybe claim bearish, but generally speaking, you probably want to go with the bullish side because we've had 70 breadth thrust. Let's just quickly recap the breadth and the rally kind of positions. We have Dwayne breadth thrust, 70 breadth thrust, the graph breadth thrust, and even a Whaley 3-day breadth thrust up here. So effectively, the market is literally improved. And the percentage of stocks above the 200-day moving average is now over 50%. So historically, that means we're going to make a new high. It's very, very rare. As we mentioned, whenever we recover as much as we did, plus 17% off the bottom, off the first drop, it's never not made a new high at some point in the future. But that doesn't mean that we can't sell off. And we actually got one of the members of our community to have a look around, and I'm pretty sure this is correct. We'll confirm it for tomorrow's video or the closed video on Monday. But last time the US got downgraded, we saw 2 sells. One of them was 6% in size, and one of them was 12% in size. So if that's anything to go off, let's just quickly measure that out because we know we're at probably a key resistance. I'd be marking out very closely 58.50 today. We're underneath the first level. We'll look at the NASDAQ in a moment. But take a look at this. If we were to go back down and fill the gap here, anyone guess what the percentage is? If you guessed around 5 to 6% into this zone, then you would be correct. So this, of course, makes the most amount of sense for most bull buyers. And if you do look at the S&P, you're going to see everything's there. You've got anchored VWAPs off the bottom. You've got the 50 exponential moving average. You've got the 20 exponential moving average. You've got Fibonacci's. You've got the previous level of demand as the market broke up. You've got a gap fill. There's a lot going on at that 5,600, 5,660. So obviously a key level to watch if we do end up selling off. Let's have a look at the NAS. Quickly look at the NAS. The NAS weaker than the S&P this morning. Certainly broke below. Got a series of higher highs and higher lows. We have not broken this sequence until now since last week. Let's just quickly show you guys what I mean by that. So every time we went underneath through this entire rally, we instantly rallied back up. So these are traps. Boom. And that could happen today. So you've got to be wary of that. Here it is. This one, obviously, we talked about this and we said, oh, no, this thing's going to keep going. Because, of course, this was an area we thought might be acting as resistance. Higher high, higher low, higher high, higher low. You get the idea. Every time it's gone underneath, it's quickly reversed. And this one is the first time that hasn't happened. So we close underneath. We don't instantly reverse. When was the last downgrade? I'm sure we can. Okay, I'm just going to get that for you right now using the power. Excuse me. Cool. Okay, so 2011, it was downgraded. So we had Standard & Poor's in 2011 and Fitch in August 2023. So August 2023, Fitch downgraded the US, and in Standard & Poor's did it in 2011. So there you go. If you want to have a look at the charts, we can do that. But we will do a comprehensive cover of that at the end of today, and we'll cover it, of course, on the daily show. So NASDAQ is, for the first time, underneath the first higher low. So you can see here, higher low, broke below. If you're going bullish today, you're probably going to need a break at 21,230 by the technicals. The reason, currently it's in a downward trend on the small time frames. You need to, of course, buck that trend to force a trap and then, of course, force a squeeze. And you can be open to that. You know, the markets can do whatever they feel like to stay as irrational as you might deem them to be as long as possible. So that's always a possibility. Now let's have a look at this US 30-year. So US 30-year hasn't closed above 5 yet, but it looks like it may. This could get nasty quickly. And I think this is the question now that everybody has. What is going to go on in the third quarter of this year when treasuries need to be refinanced? The largest treasuries, and it's not even close. This is the amount of treasuries, just to give you a bit of an idea, that needs to be financed in the third quarter in comparison to the ones underneath after. And you can see here, like, it's still big after, but there's a huge amount coming. So with these high yields, that could be a serious problem for the US. And of course, this may have the markets starting to get a little nasty. So watch this space. And the other one we want to watch, guys, is gold. And gold is now trying to bull back up. Actually had a replicable trade on this one towards the long side. Hasn't broken through yet, but you're looking for a 32.75. Now, there's no doubt this was a downward trend. Downward trend, rallies above, hits the supply, sells off, 61.8, rallies up, rejects. So you can see that this is a key level. And now it's testing this 32.50. So if we break the 32.50, everyone, what is that telling us? It's telling us that this could be a trap level, because that was an absolute clear break towards the downside. And of course, if we're seeing gold on, what does that tell us, guys? If gold is risk on, does that tell us that maybe markets are partially risk off, are partially more defensive for a little bit? Certainly could. Another thing that you want to check, XLP SPY, slight improvement last couple of sessions. Staples doing terribly, then suddenly turning around. XLU versus SPY, doing terribly, hits a level of demand, suddenly starts to spike up. These are, of course, defensive sectors. So as we posted over on our X account, you can see here, wherever it is, I don't know what all that stuff is. One sec. By the way, a bit sad that I don't know if any of you guys ever watched the Outdoor Boys, but it's like an American guy that goes and hangs out in Alaska and spends time. It looks like he quit. He just went, too many people know me. It's scary out there. I guess I don't blame him. Yeah, there you go. William knows. Yeah. Yeah, I can understand that. 4 billion views or something. That's not going to be cool. You can see here that we have semiconductors technology absolutely leading last 5 days. Last 2 sessions, though, XLV, XLU, XLP. So again, defensives, the first time we've had that the entire run up. We've just never had defensives show any signs of growth this entire rally pretty much. And now all of a sudden they have done so as we hit that resistance. So of course that's got to be considered. On top of that, we also have bullish percent index, which we put in the weekend show on both the NASDAQ and the S&P. We've got RSI. We do have a lot of overbought stats, but like always, going against the market is way harder than going with it. That is, it's more bullish than bearish. Remember, being an optimist does pay generally. So I'm thinking that to really see this all turn bad and maybe push back, it's probably going to need gold to trigger. We're going to need to see the US 500 probably break below that other support of 58.50 and then push there. No more honey butter. A lot of you guys watch out, boys. That's interesting. Can the 200 DMA be breached so this is a good question. So this is basically, if you think about it, we go to the SPX for a second. The 200 daily is one of the best reads. So we'll load a 200 daily on the chart. So you want to use a simple moving average for this, guys. So we'll put a simple moving average in. Simple. I like to make them green. Of course, I selected the watermark. There we go. And then we put the 200 in, make it obviously green. And then you can see here that we breached above this. And this is a big deal. Because if we go back through history, whenever it's breached the 200, it tends to be a big turning point. So if we go back in all of the periods when we've broken the 200, we have a breach or resistance first. We have a breach. We have a recovery back to it. Goes underneath a little bit, hits into a demand. That would make a lot of sense, wouldn't it? Comes underneath, hits into a demand, rallies up. Again, hits it again, rallies up. First time it gets through, comes back down, hits it. Probably no demand here. The demand was lower, bounces off it, rallies through it after resistance was formed, comes down, demand, hits it, bounces up. So generally speaking, around the 200 is where you usually will find bid. So can it get underneath there? I think it can a little bit, but I do feel like it probably will want to at least fill the gap at 56.60. Ed says, if you do 20,000 IUs of vitamin D and 500 meg of magnesium glycinate a day, you won't get sick. Yeah, it's just my son when the plague. But I know a few people have been sending me all sorts of things here. Karma music, pretty please. Teresa says, that's for the open here. Last episode sucked my 2 cents. I'm not sure. Are you talking about the Outdoor Boys? I can't remember the last one. I haven't watched in a little while, but I did see he quit. He probably just doesn't love it anymore. If he gets harassed everywhere, I can understand that why. Sunshine Girl, appreciate it. Thank you very much. Jeff says here we go. Jeff was the member of the community, so thank you very much. Here we go. August 5th, 2011, S&P 500 downgraded 6.59%. Next day, August 1st. Wow, so that was very quick. 2023, Fitch downgraded US S&P 1.55% down the next day. We're only 0.4 at the moment. Next day, 5.27. Over 17 days, we dropped 10.33%. And 5.27% over 17 days and 10.33% over 87 days. Yeah, you're correct, PK. Wow. It should be in the description. Yeah, he's a good guy. You can check out his music if you wish to. I think he's got a PhD as well. He's a cool guy. All right, so we've got here gold. We talked about that. Obviously, silver still stuck within the range. You guys know we're basically at that most traded zone, the 20 moving average. We're stuck in a range. We've undercut the low here, and we've bounced back up a little bit, which again is a positive. But I think I'll be taking gold's lead here because if gold breaks through that key level we looked at, that's going to be quite bullish. Yields across the board, everything's going up. It doesn't matter whether it's the 10-year, which is breaking out here to a new high. I can't imagine the markets should be able to sustain being bullish in this, but who knows? They'll do what they feel like. And then we have a 30-year as well, as you guys saw before. US dollar got thrashed there this morning. It still remains in a kind of limbo land. Technically, it's still bullish off the breakout of the daily 20. But I'm not sure if there's an entry yet in another entry for a buy. I think you'd have to be looking at a 101.14 to break through and then get towards the 102.50, which is ultimately, if I thought it was going to rally a little bit, that would be the area. But usually it should be up. So if you're seeing yields go up like this, you should see the dollar up. But this just shows you the weird, wacky world we are in 2025. US oil, not much to really state. It's at that resistance. It could be a double bottom in the future. It could be. We don't know. It could be accumulation or distribution. We'll find out. And just because the VIX is under 20, guys, that doesn't mean it has to spike. But oftentimes, when you come back down to these levels, sometimes you'll get like a little fear. Because, of course, this is the ultimate level of turnaround where the VIX has gone really high, 61, rallies all the way down. And you can see there's usually a secondary spike at some point. So it doesn't matter which way you look at it. There's usually a secondary spike after getting these huge upticks in the VIX. There's usually at least one spike. So again, we're looking for that. Let's go over to crypto here for a moment. We've got Bitcoin that rallied up and got a pretty good weekly close. It's now getting hit back down. Level to watch, 100,000 at about 6,500. If we break under this, I could see us easily get down to 95. And I think that 95 is a pretty interesting zone for buyers. If you actually fix range this on the way up, you'll notice there's quite a lot of trade in here. So this is actually a significant amount of volume went through here, probably all Michael Saylor. And because that's a key level, this is probably the target should the markets fall down, at least for day traders, scalpers. So watch it. I actually think it was a bullish close for the Bitcoin, but it doesn't mean it doesn't fall off first. It was just it was a bullish close when you look at it from a few weeks into maybe a month. Why would someone invest in stable coin that's pinned to the dollar versus Bitcoin that can appreciate? They get usually some form of staking. That's why they do it. But would I do it? No. But that's what usually happens, I believe. Market went up after they downgraded Lehman's. Yeah. Look how that turned out. Hey, Tyler. Crispy. What did Crispy say? Tom, if we see a reduction of 30-year rate, would you expect TLT to pop up? Yes. TLT is right at support demand. So if the 30-year drops and the 20-year drops, then you'll see treasuries generally bounce. VIX did pop up over 20 over the last few hours. Yep. Stable coins are fiat for the digital world. Yeah, I'm not a huge fan, though. This news with Moody, is it a concern in your opinion? Not really, because, again, it's all a concern. Like, I mean, okay, so it's all a concern when you consider that it all stacks upon each other. You know, the US is in a late cycle bull run. It's got many headwinds, including still existing tariffs on. We have, last ditch efforts to kind of get the most out of it, deregulation, tax cuts, potentially all these types of things. And then at the same time, we have high valuations, some of the highest valuations we've ever seen. In fact, I think I've got a chart here, 100 years of equity market concentration. Have a look. Market cap of the largest stock relative to the 75th percentile. Look at this. I mean, we've just never seen anything like this. So every bubble has to be bigger than the last. Of course, we are now in very unique territory. So basically what this means is that this downgrade stacks on top of the concerns for the US market. And I believe it could force, partially be part of a forcing of a recession. However, in terms of pure stats, 6 and 10 or 12, and then generally the markets would rally from that point, at least initially. That's one scary chart. Yeah, this chart's pretty terrifying when you look at it. In fact, if you go over to our X account, I'll just quickly go over there. There's a really cool chart that I shared, which I think you guys probably should make sure you take a little picture of or bookmark it, which is this one here. So this is the first 100 days of administrations that changed a lot in the US. And you can see here the ones that fell off over 20% during the start. Then you have FDR twice, who was obviously a pretty big reformer. Then you've got Nixon, and then you've got Ford. So if you actually have a look here, compared to the average president run, when you've dropped this much, you tend to recover. You tend to often make a new high. And actually around 200 to 250 days in, which obviously we're not near yet, that's when we start to see divergence between the successful, we got out of that problem and the ones that end up pretty bad. And a lot of these went really bad. I mean, FDRs went 50% down. So another really important chart. I think this one's heavily underutilized. I don't see it very often. Then that chart looks scary after hearing Charlie Munger talk about the worst recession in history back in the 1920s. Yeah. Well, when you put both of these together and you think the US is getting downgraded and you think about the situation that we're in and the fact that we're in pretty much, 85 to 90% of the average bull run. So that is, if you took all the bull runs over time and you considered how long do they last for, the best ones tend to last upwards of maybe to 2026 if you were actually angling at the average days. Debt to GDP ratio on the US debt clock, thoughts? I wouldn't pay too much attention to it, because if you look at if you ever want to load this, guys, US, you go to world debt clock and you can see that, actually I'll load it and I'll show it to you. So 1 second. Because you're going to see, if you're not familiar with this, the horrors of what these central banks have done to us. So here is the US debt clock. That is not the actual one I want. 1 second. I'll just quickly go back here. World debt clocks. Okay. This should be the one I want. There we go. So here you can see all of the debt clocks, and you can see all of the percentage external GDP debts. You can see the public debt to GDP ratio. And what you'll notice is Japan is out of control at 290%. So public debt to GDP is 290%. Does that make any sense in anyone's world? I mean, if that was a business, you would not want to buy it. Would you buy that business? Would you buy this as a company if you were looking at its fundamentals and say, wow, that looks really fantastic? I'm pretty sure most of you would not buy that. So when you look at this public debt to GDP ratio and you look at all of this experiment of the monetary system, you can kind of see the dangers here. The US, however, is a lot less. And remember, the US has the US dollar. So the ability for the US to print more than anyone else is very likely. And therefore, if Japan's printed this much, the US can print a lot more. Humble Hiker says 2023, negative 10.31% after 58 days. And then the S&P posted a 37% gain over the next year. So this is when the downgrade happened. Yeah. So we don't pay too much attention to the downgrade. It's a very good news story. It scares the crap out of everyone. This would scare everybody. If you saw this the first time, you're going to be like, I don't want to own the market at all. But that's not the way it has to be. You've got to say, okay, well, what does this mean? And it means that at some point there's going to be a reckoning, but most of the time that's not going to happen. You've just got to keep your ears to the floor, and you've got to pay a lot of attention to market structure. And obviously, so far with the thrust, with the yields, we have to believe that markets will try to make a new high. That's historically what's happened after pullback, maybe. And then the question then is what happens after 200, 250, 300 days, which is coming up very soon. What's your X account, Tom? At FX Evolution. Just at FX Evolution. What about OPEX expiry effects this week? Yep, they could create massive options movements. Obviously, any week when you get near the close or near the last day of the week, you usually get a lot of expiration. So again, if you're looking at today's price action, you can see here we're for the first time below the last swing's anchored VWAP. You can see that the last time and the lower low, we're not below 58.50. So you go to all of these anchored VWAP levels, you can see that we've traded these a few times. I never liked the second trade. So this is 1, 2, 3. But at the same point, you're really looking a lot at 5,900 today and 58.50. And if we get underneath 58.50, maybe you might just want to wait and chill, and the 56.80 hopefully, or 56.60, 5600 could be hit. The money creation tab on the main page is a good read. Thank you, Michael. Bitcoin had a nasty pump and then dump. Haha, 107. Yeah, I like the close. I like the close quite a lot. But I do feel like we could get a 95. The money creation tab, yes, that's right. What does this all mean for TLT? I'm holding long term, but it's getting painful. Well, as you know, you don't really want to see treasuries hit 5% and close because obviously, if that happens, it puts pressure on treasuries. Could it push it down to 83? Yes. Obviously, the thing with treasuries is it's a mixture of risk and it's a mixture of yields. So at the moment, yields are going up. That pressures down treasuries. So treasuries are falling. We do have one large trade that came through. We obviously don't know which position that was, whether it was a buy or sell. But for now, if US 30Y doesn't come back underneath 5%, then you're going to keep going down as it goes back up. Where do you predict the bottom today? Well, I wouldn't think we'd bottom off today if we were going to bottom, but usually you want to look at your options levels, and we don't really have a huge call zone or put zone. So I guess you'd say 58.50, 58.30. Even though it's not today, it's on the next session. 58.50 is the put wall. I wouldn't touch TLT with the 10-foot pole. Yeah, I can understand that. Obviously, there are risks in. I think US government debt ultimately is fine. But this time around, with the third quarter coming up, and we'll share this on the daily show at one point, that's going to be a big issue. So in summary, guys, we have resistances on many things. As the weekend video talked about, we have resistance on the NVDA position at 135 call wall. We have Tesla, which is another massive options position, hitting our 350. Congrats to anyone that got that. 330, 350, excellent trading. And then, of course, we have the NASDAQ breaking below on very small timeframes. Has it changed trend on the higher timeframes? No. We are looking probably at 21,230 from the bull side if you're being bullish. I'm not that bullish here. I just don't think it makes that much sense at this level. You're only a few percent above. We know that we generally hit the daily 200 once we've closed above it. That's like 5% below the current market. So I would just be chill, but you have to believe those things. And you can see here that the US 500's broken the first support of 5,900, but not gotten through the series of higher lows, higher highs in terms of what most people will be looking at, which is 58.50. You can't default on debt when you issue the currency it's denominated in. You'd be surprised. There's been a decent amount of history of the UK getting away with a little bit of the debt. Didn't Sydney have heavy rains yesterday? May have. What do you think about Tesla today? It's at resistance as of the close here. Barry positioning and the EL position, will that mean recession? Well, you got to remember the Barry position was taken as of the 31st of March. I don't know if we know whether he closed the position or not. I guess for his sake, he probably hopes he did. But yeah, the filing takes a while to come through. So I'm assuming he closed it and then it's rallied up since then. But we don't know. Maybe somebody has been following that story. But remember, it's outdated. You trade in midnight in Australia? Yeah, the close is usually the best though, gear. So if you're wanting to look at where the biggest money comes in, whenever you look at the US 500 or you look at any market, generally the close is the best for taking a lot of position trades. And that happens early morning in Australia. The open, it has its own strategies. Obviously, there are day trades that can be taken around here, but I find that for swing, for position, for investment, generally the close is the key. Fed just waiting to buy a bunch of discounted long bonds, their plan all along. Yep, could be. Any thoughts on the Trump-Putin talk today? No idea how that will impact the markets. It's one of those things where it just seems like at the moment we're really stuck in what we said, which is don't have too much emotion this year. We said at the start of this year, January, this is a year of no emotion. Unfortunately, we are polarized in our opinions, all of us. So how do we get past that? Well, we have to just say, what's the flow doing? What are the charts telling us? What are the largest positions doing? Follow them. Don't follow our opinions because our opinions are generally going to be wrong here. No, it's not to do with the time difference. The after hours or the close is generally the best place to usually trade any market. It doesn't matter whether it's the ASX, so the Australian market, or whether it's the US market, or whether it's the European markets. The close is generally the best position. And the reason why that is if you've ever seen that chart which shows you holding overnight, anyone ever seen that before? I can share it in an upcoming video. So if you hold overnight versus hold during the day, the difference is astronomical. When you're prepared to hold the risk overnight, it's insane. You make so much more money. This is correct whole milk. This is often what happens at the end of bull runs as well. Guys, unfortunately, I'm going to have to cut it off here. We've done some of the key levels for the US 500 and the NASDAQ. Next week, we'll come at you with the normal size show. But watch gold, watch the US 30 year for the closure. We'll come at you with the close after the end of today. Obviously, Bitcoin, I can see it fall a little bit more here, but it was a good weekly close. So that's good for the swing traders. And just remember, the two main options trade single stocks, NVIDIA and Tesla, both hit our resistance. So we're hoping that we get a pullback here because it makes statistical sense, but markets will do what they're going to do. And the first level that we're aiming for is obviously the gap fill. Thank you so much, everybody. Appreciate it. Give it a like if you enjoyed today's video, and we'll catch you in the next one. Bye for now, guys.